Hey, Bulls and Bears, it's Friday, December 2nd, 2022. Thank you very much for being here. Let's start off with the biggest news that we're seeing across most of the business news networks, and that is the jobs data. And if you believe the real numbers, if you believe the data that we're being fed, then this number came in really good. Now, here's the thing. I don't believe these numbers, and I don't think you do either. But let's just go with the numbers. What they're telling us here, unemployment's still at 3.7%. Also, the jobs data, non-farm payrolls increased by 263,000 for the month while unemployment stayed held steady. But the payrolls number was above the 200,000 that was estimated. So now we have this situation where good news is actually bad news. And why do I say that? Because now the Fed's going to look at this, they're going to look at these numbers. And what are they going to do? They're going to say, well, the economy is still holding up strong. We can go ahead and keep increasing rates. And maybe instead of a 0.5% rate hike, maybe they'll keep it at 0.75%, which I think is still too low. But the fact is, this is going to give the Fed more confidence to keep on raising interest rates. And that's going to be trouble for a lot of people carrying debt. Now, I was just going through an article earlier about credit card debt and the average interest rate for credit cards. The interest rate went up yet again on credit cards, and now it's actually 9.04% as of last month, as of November 9th. That's the most recent numbers that I have. And people are in record debt. 7 out of 10 people record debt. Interest rates are high as they've ever been, an all-time high with credit cards, and they're going to go higher because the Fed's going to keep raising rates. They're going to be crushing those that hold debt. If it's fixed debt, if you're on a fixed rate, a 30-year mortgage or something like that, you don't have so much to worry about. But if you're carrying credit card debt and not paying it off in full each month, I really hope you have a way to get out of this. Yes, there's always bankruptcy, but once you stop making your payment in full each month on a credit card with that sort of interest rate, you're going to be underwater very, very quickly. So we see all this holiday spending, and we know that most of this is people taking on more debt. So we think 2023, we see it as a very, very bad year, a defining year. It's going to be very good for some people. It's going to be very bad for even more people, unfortunately, but that's what I see with the numbers and the data here. Now, speaking of holiday shopping and holiday spending, a quick story. I was at a sporting goods store actually earlier today. I had to go pick up something, gift for the holidays for somebody, and I couldn't believe how dead the store was. Usually around the beginning of December, stores really start getting crowded with Christmas shoppers. Now, if we are to believe what we're being told, most people now are just shopping online, and we saw these record holiday spending numbers through Thanksgiving, Black Friday, Cyber Monday, and that's the cover story for why the stores are so empty. Now, we've had the ability to shop online for decades now. Why all of a sudden this year there's such a big divergence between the in-store crowd and people shopping online and getting packages delivered to their front doorstep? Why this year? The pandemic's not as bad as it was. So what's the reason this year why it's so much different than versus previous years? I think we're not being told the full story. I don't think we're able to see the full picture based on the data that they're telling us. And would anyone be surprised if the sales numbers, the holiday sales numbers, were completely phony? Now, you may look at inflation and say, yes, people are spending more because everything costs more. That's one way to look at it. But the big divergence between the in-store and the online purchases, that is my big question. And we're going to get to that survey in just a minute. I put a survey down in the community tab for all of you viewers. Who is spending more? Who's spending less? Who's not spending anything? Who's spending about the same this year on holidays? We're going to talk about that here in just a few minutes. But also, I'd like to know in comments, what do you think about these numbers? One, the jobs number that we talked about at the beginning. And two, these numbers. And have you seen a difference this year when you're at a store, even Costco or something like that? Is it less than you remember from previous years and previous December holiday shopping seasons? To me, it looks to be a lot less crowded at these stores this year. All right, now back to credit cards for a minute. The national average APR for credit cards climbed by 2.7% just in the past 1 year. And that is the highest on record according to Bankrate. That's the biggest increase. So we have record increases in credit card interest rate combined with record levels of household consumer debt. This doesn't end well, folks. And I think that's the reason why you're seeing stores so empty. But yet we have this online number that we're supposed to believe that says people are more wealthy than ever, that everybody's shopping. It's record breaking. Everybody's out there spending money. Nobody has a worry in the world. Something doesn't add up, especially when you factor in this next piece of data. I pulled up the personal savings rate. It was just updated yesterday. What I do for all of you is I keep an eye on a lot of different economic charts and data, and as soon as it comes out, I try to be on it as soon as possible. So we're here at the personal savings rate over at Fred. That's the Federal Reserve Economic Data website. And we have the latest numbers in the U.S. consumer savings. And what this is the amount of money that people have left over after paying their costs of living and all their basic expenses. And it has dropped yet once again, another figure that defies these record holiday numbers, record holiday spending. Here it is. Previously, it was September was 2.4% was the personal savings rate for the average U.S. household. It dropped in October down to 2.3%. So savings dropped yet once again. This was just updated yesterday, December 1st. The numbers lag by a couple months. These are the October numbers. And January 1st, we'll find out what the November numbers were, etc., etc. Now let's get into that survey that we put out. Let's get into that right now. Thank you to everyone that responded to that survey here on this channel, Bull Boom Bear Bust. I said, hey, Bulls and Bears, quick survey regarding holiday spending plans. This holiday shopping season, are you cutting back? Are you spending about the same as you did in previous years, or are you spending more? The number one answer, this was 45% of respondents spending less on holiday shopping this year. So even though prices are higher, most people are spending less. Looks like we have a lot of people that are seeing something on the horizon this year in the economy, or anyways, what's happening right now. So people are being cautious, obviously. Only 6% said they're spending more. About the same was 22% people spending about the same as they did in previous years. Surprising right here, 27% of you said do not celebrate the holidays / do not buy gifts. That's very interesting. Thanks to everyone that responded to that survey. All right, now let's jump on over to the housing bubble for just a minute here, the U.S. housing market. What we're seeing right now is affordability continuing to worsen, unaffordability increasing, and it's gotten worse. Even with slightly lower home prices, especially out here on the West. Now, a lot of you on the eastern part of the country are not seeing much at all in home price corrections. In fact, most states, a lot of states over on the east side of the country are still going up. But on the West Coast, we are seeing some corrections here, including a few areas, a few cities that are down year over year, meaning the current home price, the median home price, is lower than what it was 1 year ago. But we're definitely down since the beginning of the year, since mortgage rates took a big jump. But here is the danger. Those that have to get a mortgage, those that don't have cash to buy a home, your payment's going to be higher now, even with lower home prices, because of the higher mortgage rates. So the winners in this are going to be big money investors, cash buyers, institutions, etc. Here's the thing. Institutions and investors are pulling back on home purchases. Why? Because they see further corrections on the horizon in the housing market. So even people that have cash, even companies that have cash right now, they're not investing at these prices. There's still some investing, but we did see a big drop from the second quarter to the third quarter in investors buying homes. That's happening for a reason. And a little more over on that, these institutions, they can get billions of dollars in liquidity, borrowed money to buy homes. Even with that, they still have slowed down significantly in their purchase of homes. Institutional investors, investment companies, they're not stupid. They're going to wait till prices get even lower, knowing that the average person that has to rely on a mortgage cannot afford a home at these prices. People are still getting mortgages and getting into homes, yes, but a lot of these buyers now at these current levels with these current mortgage rates are going to be paying the piper down the road when they see the cost of carrying this home with the utilities, the maintenance, the taxes, the upkeep, everything else, the homeowner association fees, which is outrageous in many areas. I was looking at a subdivision here, a newly constructed subdivision. HOA fee, $690 a month, almost $700 a month, just HOA fee. Outrageous. How are buyers of these homes at these levels, at these interest rates, going to sustain this in an economy that's got the cost of living that's way beyond what we've ever seen before and not getting better? Wow, 2023 is going to be an interesting year to say the least. But let's get down to some other news here, moving away from the housing market. Now, another piece of data that came out today that was supposedly positive and good news was the average hourly wage earnings. Wages jumped 0.6% for the month. And what they're telling us here is wages are now up 5.1% annually. But compare that to the rate of inflation, which if you look at the official number, 7 and 8%. If you look at the actual cost of living or the real number, it's closer to 15 or 16%. So a 5% increase in wages versus that outrageous cost of living. So people are still not keeping up with inflation, even with this supposedly good number coming out for wage increases, hourly wages increasing 5.1% year over year, still not good. And that's for people that are working. What about all the people that are not working? What about the people on fixed income, unemployment? And if you believe the 3.7 unemployment number, then you might also be someone that's waiting for Santa Claus to show up at your house and bring a bunch of toys, right? It's just outrageous that people still believe that these numbers are real. We've pointed out time and time again here how the unemployment number that they're telling us, the 3.7 number, and all the numbers for many years going back have been fake and false. And that's because all you have to do is look at the labor force participation rate. And that gives you a greater snapshot of what the unemployment situation really is. But for those that do believe that, and for those that are waiting for Santa Claus, please tell Santa Claus to bring me, this year, bring me a lower cost of living. And I hope the man in the red suit will deliver on that. Happy December, everybody. Hope everybody liked this update. Please let me know what you think down in comments about the positive numbers, about the payrolls increasing, the savings rate dropping yet again. This supposedly good news on the rise in wages. Please let me know. Thanks, everybody, for being here. Big love to everybody. Bye for now and peace. Keep stacking.